Good evening, traders. Welcome back once again to our channel. Tomorrow is a big day, the D day, but everybody is calling and everybody is like making people scared. The new traders are scared, scared to the core. The people who have got little experience and they're also getting scared. The people who are experienced, they show their views and they give their ideas, their own ideas, how to trade this kind of volatile market. A trader, I would rather put it. This is very simple. It's going to be a trending day, that's for sure. How do you treat a normal day? That's how you need to treat this market. It's not going to take your money out, and then it's not going to give a spike of say 400 points in one candle and then bring back that 400 points in one day. No, it's not going to happen, because all these people are giving a very wrong information about this, because this is how they gave the information last year. If you just go back and recheck the last year's candle, how the market has performed, I'll tell you like how it has happened, and the way that the people have portrayed it was completely different. Like you guys thinking, oh my God, should I do a long triangle or long straddle or a short straddle? Do we have to do something extraordinary? All these things, nothing. You, even if it's going to be a trending day, how does a trending day work? It will definitely show you a volatile market. It's definitely going to be a volatile market. Just see this May 14th market went on one side. Just see this kind of market, on a normal day. May 17th, see this market, how did it fall? It just came down like anything. You can see, there is a volatility in this market. You have a green, you have a red in between, and see this market here. 9:15 market open, they went straight up in one candle. Just see, how much it moved. Roughly about say 300 and 33,560 it opened. See, this one single candle has closed more than 300 400 points. What is this? Not volatile? I seriously don't have an idea. These people make nothing out of anything. You just they're just like scaring the people off. I'm not saying that's bad or that's good. I have my own views, because last year it was the same scenario. See, this is the last year. This is Feb Feb 1st. You can see the morning 9:15 candle here. The market opened Feb 15, 9:15 candle open. You could see that the market was overall in a downside trend. The downtrend was continuing for at least like 3 4 days, and then market was trying to have a pullback into it. And the day previous to it, market tried to open up in the high, and then market tried to close in the low side of that particular trend. So what happened was, the next day the market gap up open, and everybody, after thinking it's a gap up open, everybody thought that market is going to come down and then go. It's like a normal day. It just like when it formed a good price action. See, there was a good pin bar forming, and then the low of the candle has not been taken. After that, the market went up. It formed a small doji, and it formed a good candle, and then it reached one particular level. See, there's a level here, and then it formed a rejection candle here, and then the sellers were not interested. Maybe the market was doing good. The news flow which was happening into the market was really good, and you had a big candle by 12:45, and then market did not look after this. Market went on continuously making 2,000 points, and it was the same thing which happened in the first of February in 2020 as well. That day the market went down. In fact, it was volatile the whole time. So let me just take you there to 2021 Feb 1st. And the way that the people has been putting across the D day, you don't put your money, it's a big time, you'll be in loss, and all those things. I really don't understand. Just a moment, guys. I'm getting dates here. I didn't have an idea to make a video for this, but I thought like this would definitely help us. Yeah, exactly. Here you can see this was the day. This is Feb 1st. The market opened up here. The market, in fact, like gap down open. You can see there was a consolidation phase before the the big day, and market after consolidation, what it's going to do? It's either going to break up or break down. It's going to happen. That's for sure. So market, it wasn't a so confusing day here. Yes, there was a pull up. That's very quite normal. Like every day it happens. Like it was trying to break up the high, and then it started like pulling down, and then the low of the candle was taken up, and there was a full there was a flurry of momentum in the downside. This is very simple, and it's quite natural. This is going to happen. So what would be my advice for you guys is like see, I'm going to take you to today's situation here. See, you understand the market in the last 2 days, it was completely in a range. You can see this was in a range, and it was trying in the full range, and market opened within the range, and it was trying to break the range. It could not break. It was again within the range. You can see this is an inside candle formation. So what is an inside candle formation? It's going to break. In case whichever side it's going to break, it's going to have a momentum. So if I'm going to take a daily candle, you'll easily understand. Like see, this particular candle is showing an inside candle for this big red candle. So if the high of this candle is being taken up, you can have a momentum on the upside. Or if this low of this candle is broken up, there will be a momentum on the downside. Now, how do you now understand, looking into the data, how does it look for you? Now we have to look into a weekly candle. See, what does this weekly candle shows? You can see there was a complete downtrend for so many weeks now. This is like 1, 2, I think roughly about say yeah, more than 10 weeks the market was continuously trending down, and then you had a pullback. You had a W pattern formation. Here you can see there was a W pattern formation in this pullback. The market went up, came down, from the W pattern, market started moving up. At this level, the market started facing a resistance. Now at this particular week, the sellers have started coming into it, but the follow-up for this particular week was not there. The week of this candle, the particular, you can see it's a complete doji, which means the follow-up for the candle is not there. Now this is the newly formed wick. This is the new candle which is getting formed. Now you can see there was a bottom wick getting formed. What is this showing? This is showing the buyers are in control, the sellers are not in control. If the minute this high is being taken up, the minute 38,415, the level in the spot chart, what I'm talking about, 38,450, or you can keep a round number of 38,500. If this level is being crossed, and you find one 5-minute or a 10-minute candle getting closed, and if you are finding a higher high pattern, which means a higher high pattern is you have to find one more candle getting formed above that 5-minute level. The minute it is getting formed, you can enter into a trade. It's definitely going to be a good trade for you guys. Mark the range and work on that. So that is one way which I've identified. And then if I'm just going back to a 30-minute candle or a 1 hour, let me take to a 1 hour candle. See, this is the bigger picture of it. Yeah, let me go to this 30-minute. That'll be even much better for you. Yeah. Okay, this is a 30-minute candle in a Bank Nifty index spot chart. Now, are you able to see an inverted head and shoulder pattern? I'm going to hide this. Now you can see this is the left shoulder, this is the head part, and this is the right shoulder getting formed. So this is how it's looking. Now if you put a trend line which connects, this is the neck of the head and shoulder pattern on a reverse side. So what will happen if this is forming? There are two things. The minute this trend line is getting broken, and if you find a higher high formation here, the market can go upside, or the other way around. There is a small trend line which is getting developed in this particular zone. You can see if this trend line breaks, and if there is a negative news into the market, obviously the market is going to react for that. And if this lower range of this particular market has been taken up, the market is definitely going to hit this level. That is for sure. This is how the market is going to react. I seriously don't have a clue why, if this level has been taken up. For example, this level is holding yesterday and today also we had a rejection from this level. If this level is taken up, you are going to have a down flow down all the way to 37,000, and then if this level has been taken up, you can see the last thing support as 36,500. So you have roughly about say 900 to 1000 points of momentum on the downside, and the same amount of momentum is available on the upside as well, because if the news are going to be like this. So typically what happens is there is a breakout after 12:45 or 12:30. You can see which side the market is getting broken, and you can enter into it and hold on to the trade. It's definitely going to be a good day for you guys. So don't get panicked, don't get worried about all these information which is all over the YouTube. It's running left, right, center, and people are like scaring the people, all the new traders, or the people who are little experienced, the people who have come into the options trading, all the people like are really scared, like they think it's a monster out there tomorrow, and they are giving an impression that the market is going to fluctuate like 400 point upside in 1 minute, and then 400 point fluctuation in the other minute. It's definitely not going to be like that for traders, for sure. It is going to be a volatile. It's a very normal, and if you are if you are associated with Bank Nifty for at least like 3-4 months or 5 months or 1 year or 1.5 years, you should be knowing how volatile the Bank Nifty even on a normal day. The same amount of volatility is going to be there, but tomorrow for sure you get a trending day for sure. You can get a range breakout. The market would be in a range, and then it will start breaking the range, either upside or the downside. So you have to think like which side it's breaking, and that side if it's breaking, you're going to go and trade. There's no point in watching the newses. There's no point in watching the CNBC and then going live and all those things, because we don't, what we think as positive for the market might be negative for the market. What we might think negative for the market may be positive for the market as well. So it all depends upon like who is pitching. In the share market completely works on a different scale. If you think the market is negative, the news flow is negative, we think the market is going to be completely acting against this. It's going to like go down continuously from there. We never know, the market can do the opposite as well. So work on the range. Don't watch the news. There's no point in watching the news. Just mark the ranges, keep your stop losses ready, enter into the market. Yes, since it's a volatile day, so it's going to be a trending day. Even half the quantity is going to give you good money. Even less than that is going to give you good money, provided you're going to hold the trade at least for 1 hour. Try holding the trade at least for 1 hour, traders. That's going to help you. I'm going to do the same. I'm going to try to hold it till 3:30, no matter what happens. Even if it's going to come back and take my money, that's okay. I'm okay with it. The minute it started moving away, I will try to put that in my buying price. I will trail my stop loss to my buying price, or if I'm able to find a swing, and then I might trail to that level and see what happens. Let's see. Let's ride the market tomorrow. Thank you for watching, and if you are watching this video for the first time, please do subscribe for this channel. Please do comment, please do like, and whether you like the video, please put your comments. If you don't like the video, please do comment it, so that we will know where we went wrong. And please do subscribe us, and that will help us to give these kind of good content videos that will help you out in the trading. Thank you for watching. Have a wonderful trading day, particularly tomorrow. Just be careful. Thank you.